And also, I don't think it is a crypto. I mean, yes, it has a token. Yes, it uses a DLT. Yes, it uses, as in, substrate. But really, it's all about AI. And it just so happens that the only way you can do distributed decentralized AI is you need a consensus mechanism. You need a DLT for that consensus mechanism. And yeah, it's the old. I genuinely think the only way anyone is going to punch OpenAI in the face is via decentralized AI. So this is the future. One of the things I really love when it comes to investing is virgin landscapes. I think people probably sick to death of me saying about virgin landscapes and ecosystems, but that's where money flows. And so, like, if you were to set up a business or invest in something, I mean, from a first principles perspective, you need to invest in a growing mountain, not a heavily exhausted, mined out, hollow mountain. So you need to put as much sort of upward or tailwind up your chuff as possible to add in extra success probabilities. And so for me, that's finding brand new virgin landscapes or ecosystems. First of all, I love it. A bucket load of grifter subnets where they're just sitting on emissions and not doing anything. And some of these grifter subnets, they've made, $1 million+ worth of just emissions for like nothing. And so if you were to look at Bittensor as an engine, we're not firing on all of our cylinders right now. So having a subnet cap, I think, in order to consolidate energy and just to just really get as many cylinders firing as possible, I think that's a great thing.
Welcome to the Ventura Labs podcast. Today, we're joined by Siam Kidd, the founder of the first Bittensor hedge fund. We'll dive into his philosophy of betting on untapped ecosystems, unpack how Bittensor subnets operate similar to startups, and explore the infrastructure fueling this AI crypto revolution. Expect a fast-paced breakdown of his rigorous framework for evaluating subnets, the role of incentives in driving performance, and why he thinks most subnets are grifts, but the right ones could change everything. Now, back to Siam with the 52nd Ventura Labs podcast.
All right, Siam Kidd, Mr. Revenue Search. How you doing,
Hey,
man?
yeah, thanks for having me.
Yeah, absolutely. Let's crack off, as you say, by
Oh
how'd
my
you
God, yeah.
how'd you get into Bittensor, man? How'd you find the ecosystem? What drew you to it in the beginning?
Long answer or short answer?
Any length you would like. I have all day for you.
um, I okay. Let's do the long answer because I think it helps other people. Because it's helped me for years, and I don't know where I came up with this or learnt it. I've read a lot of books in the past, but one of the things I really love when it comes to investing is virgin landscapes. I think people probably sick to death of me saying about virgin landscapes and ecosystems, but that's where money flows. And so, like, if you were to set up a business or invest in something, I mean, from a first principles perspective, you need to invest in a growing mountain, not a heavily exhausted, mined out, hollow mountain. So you need to put as much sort of upward or tailwind up your chuff as possible to add in extra success probabilities. And so for me, that's finding brand new virgin landscapes or ecosystems. And history has shown this in the past. So if we go back, to the oil and railway boom, to the gold boom, to the automobile boom, and like, in the 60s to 80s, anyone that nailed computing and coding became billionaires. And then in the 90s onwards, we've had anyone that, the virgin landscape was the internet. And anyone that nailed that became billionaires. And people are still becoming billionaires based off this continuous 30-year hype cycle or boom. And techs always launch off the back of other techs. And they are varying sizes and scale. So obviously computing, coding, and the internet were pretty big virgin landscapes. We then had the App Store in 2009 because we had a brand new, aperture or device or smartphones. And I guess the App Store is one of the biggest revenue streams for Android and Apple. And then we had the internet, the crypto boom. That's a virgin landscape. Anyone could create a decentralized, a crypto project. And again, the amount of billionaires Bitcoin has made and crypto full stop. And then within crypto, which again is a booming, growing mountain, we then had Ethereum that popped up with ERC20, where anyone could create a dApp. So again, Ethereum went nuts, and projects within or that launched on top of Ethereum also went nuts. And so, I went all in on Ethereum, at $9. I loved it. I was like, oh my God, this is like a virgin landscape within a virgin landscape. And so for years, I've been looking for the next one. And I've, for a time, I liked Cardano. I don't like Cardano now. Like all of these were like copycats. They weren't like doing anything new. We've had all sorts of Ethereum killers and stuff like that. But Bittensor, as soon as I discredited Bittensor for a good 6 months because I thought, it's just an AI thing. The website looked dog shit, still does, as in the official Bittensor website. It needs a revamp. Whoever runs that, just get someone to do it up. And then as soon as I learned about the subnets, I was like, here we go. We've got a brand new virgin landscape here where you have, independent AI startups that can launch within this big AI incubator umbrella structure. So yeah, that is my, I guess, Bittensor sort of foray.
And then you describe it as AI startups can launch under this ecosystem. Do you see a subnet the same way you see, do you view Bittensor as the Y Combinator, as the accelerator for these companies?
Yeah. I mean, I've got, I have loads of different analogies and definitions of Bittensor. Just like if I said, explain the internet, go. I mean, how many different ways can you explain the internet? There's so many ways. It's the same with Bittensor. And when I'm chatting with people, I try and understand a little bit about themselves first to try and match up their experience and knowledge level with the appropriate analogy that it would click. So, for some people, they may like the analogy that it's the S&P 500 of decentralized AI. There's lots of little catchphrases out there that you can use. And the thing that really resonated with me is that I've been doing mergers and acquisitions for 12 years or so. So I like buying businesses and doing them up and then selling them. Or I used to buy a lot of distressed businesses. I didn't do very well at that because buying a distressed business is, you've got everything going against you. It's distressed for a reason. It's because it's buggered up. And then you come in and you're like, yeah. So when I looked at all of these subnets, I was like, wow, okay. I can sort of take previous experience here and apply it to these subnets because Bittensor straddles 3 lanes. It's straddling, the main lane is AI, obviously. It straddles the VC world because these are independent AI startups. So I can look at, the whites of the eyes of the people running it and asking the age-old traditional biz type questions, which is a reason why, we launched Revenue Search, because I want to ask those questions, which you don't see online or on social media. And then obviously due to the UMA consensus, it straddles crypto. So technically we're not really a crypto, but it has all of I guess the positives of crypto. I think the immediate bootloader of Bittensor in terms of the first tranche of investors of Bittensor are crypto people. But the retail crypto crowd is not the future of Bittensor.
A lot of people in Bittensor share that sentiment of Bittensor isn't really crypto. Why do you think that is? Even though it is a crypto project, technically, a lot of people like to differentiate Bittensor from the rest of crypto. Why would you say that's the case?
I guess a couple of reasons. One, crypto has a bit of a negative connotation with it. If you speak to anyone in big enterprise or in government or whatever, the word crypto is like garlic to them. That's why all of these new crypto funds, not a single fund calls themselves a crypto fund. They call themselves a digital asset fund. I mean, it's just a very wanky way of saying, hey, we're a fund, we invest in crypto. um, so there's that negative connotation. And also, I don't think it is a crypto. I mean, yes, it has a token. Yes, it uses a DLT. Yes, it uses, as in, substrate. But really, it's all about AI. And it just so happens that the only way you can do distributed decentralized AI is you need a consensus mechanism. You need a DLT for that consensus mechanism. So, and yeah, it's the old. I genuinely think the only way anyone is going to punch OpenAI in the face is via decentralized AI. So this is the future.
And in the context of Bittensor, how would you describe what subnets do? It's just they produce AI? Is that how you frame it? Or what do you say?
Every subnet is different. Just like if you looked in the S&P 500, you have 500 different companies. They all do different things. Tech stocks, war stocks, pharmaceutical stocks. So all these subnets are independent AI startups, typically 2 to 20 odd engineers or people in it, all focusing on their narrow niche. We just did revenue search for score. So whether it will be computer vision or it will be protein folding or advanced drug discovery, they all do something completely different. What a subnet is effectively a public challenge, isn't it? It's an incentive mechanism to help solve a challenge or an issue or a problem. So, this is why I think that, each subnet is like an Ansari X Prize. It's like, hey, we have this problem, challenge or task. We will pay whoever will provide or fix this task. So if it's, a compute subnet like Celium, it's like, okay, the task here is that we need compute. So we are going to reward those that provide compute. So that's not AI. It's just that's core. That is compute. And so I think a lot, not all, a lot of the subnets out there right now are just doing hardcore AI infrastructure. So there's not actually many subnets, in my opinion, that are delivering real intelligence or real inference just yet. I mean, some are, don't get me wrong, some are. But as a whole, it's that an island analogy I use. I don't know if some people have heard it. I think Bittensor is this brand new island that's popped up in the middle of the Atlantic. And it's just, it's wasteland. It's just forest or dirt. And in order to have businesses on this island, you can't just plonk a building on it and then expect things to work. You need to, first of all, scrub the island clean. You need to put foundations in. You need to put tarmac everywhere or roads. You need sewerage, irrigation. You need plumbing, fiber optics. You need an airport to get planes there. You need a port for ships to get there. You need electricity generation and storage. You need everything. So building an island is really freaking hard. In the real world, if you're to buy a desert, an island in the middle of nowhere, there's a lot you need to do. And then only once you've built that infrastructure and you've built the buildings, will people rent or buy the buildings for businesses. And then it's those businesses that will create stuff. And then, so that's layer 2 or phase 2, where businesses are coming onto the island and setting up shop. And it's those businesses that will create apps, where that's phase 3, and where retail, the rest of the world, are using those apps. So yeah, we don't have a ChatGPT equivalent, in Bittensor yet. Yeah, we don't have the Facebook equivalent. I mean, Facebook launched in 2006? Way after the tech boom, way after the tech bubble. And so the Facebooks of the world, the Googles of the world, I don't think are even born yet. At the moment, the subnets that we're seeing are like the Alta Vista and Yahoo and AOL of the internet. So, and what we see in tech, in every tech cycle, every industry, is that the first movers are never the ultimate winners, which is going to be a bitter pill for a lot to swallow. So basically, history has shown us that every subnet we see right now pretty much statistically, none of them are going to be the Google or the Facebook. So as an investor, that's something you need to be aware of. But it doesn't mean that they're not going to do well. AOL, Yahoo, AltaVista, Mosaic, all of these old school companies did really well to begin with. Nokia with mobile phones. It's just you got to dance on the dance floor, but very close to the exit.
That's interesting. To stick with your island analogy here, you would say we're in the phase of like building the roads, or we're still developing the land to be able to even build the roads?
Both.
Okay, so
Yeah.
it's that early in your mind.
Yeah. And what we may see is subnets that are popping up that go, right, I love this island. You guys do whatever you want. We're going to buy this chunk of the island. And then they rapidly build in infrastructure, the phase 2 with the actual business. And then boom, they got something up. So, the chunks of the island could develop very, very quickly. And we are seeing some do that. But ultimately, I think in order for BitTensor Island as a whole to get to fully tick phase 1, 2, and 3 and get out there in the world and be the Linux of AI, like it's those big moonshot projects like Templar and IOTA. I'm actually going to say this later today on a revenue search that unfortunately I think 90% of the value of BitTensor will be delivered by 10% of the subnets. And it's those, I know we are like DSV is going down this whole revenue search type thing, because I think in the short to medium term, the subnets that do spit out real world or derive real world revenue and then reinvest it back into their alpha, they'll do well. So I think loads of revenue driven subnets will shoot up that emissions leaderboard. But in the medium to long term, it will be the moonshot projects, which BitTensor was really designed for, designed to incubate, that will deliver the huge upside of value with the BitTensor. So for example, distributed, decentralized training or permissionless training or pre-training or fine-tuning, they're things that most experts had said, nah, impossible. Like even a year or two ago, they're like, nah, can't happen. But what is Templar doing? What's IOTA doing? Like they're actually doing it. If you look at some of the porn that Templar is producing and some of those charts, like in my eyes, that's AI porn. Seeing those compression charts or those loss charts, it's like when Templar can do a fully permissionless, distributed, decentralized training run on a model that has an equal or a bigger parameter than the leading OpenAI model. I mean, centralized AI is toast. Like forever toast. Just think about it. If Templar can pull that off, there's no way that a centralized entity could even catch up, because even if they wanted to double their compute, they'd have to go out and buy hundreds of acres of land to put in, basically do what Elon's done with Colossus 1 and Colossus 2. He's had to buy a shit ton of land, build massive buildings, and then he's needed to basically hook them all up with rigs and data center. You need energy generation, energy storage, and you need, the networking feet alone. I mean, you can't just rig up a whole bunch of H100s or B200s or whatever and get them all to work, like a nice choir. So the networking feat he's done there is monumental. I think everyone should watch that interview that Jensen was talking about Elon and with Colossus 1, where he was saying to build Colossus 1, most companies would have taken 5 years to do that. And the networking issue there is gargantuan. Elon did it in like, what was that, 9 weeks? It's just nuts. And he's now done Colossus 2, which most people don't realize. So in order for Elon to, double his compute power and all that, he has to double the hardcore infrastructure. Whereas in order for BitTensor to double the compute power, it's a lot easier. So
Yeah. What are these types of categories in your mind that you think are that ground zero, the land development, the infrastructure for the island? What are the categories you would say of Subnet?
Yeah, I think it's that full main AI stack. Now, I don't think there's like a universal agreed terminology, and everyone says similar sort of things. But if you look at things from a first principles perspective, first of all, the top of the tap is energy. Like you can't get AI without energy. So you need energy generation and storage and distribution. So it's all very well storing a shit ton of energy, but if you can't transmit it and distribute it, it's irrelevant. So, you know, a lot of people say, oh, Africa's full of empty hot land and whatever. But yeah, okay, fine. Fill it up with solar panels and fill those batteries with energy. Wait, who's going to use it? You can't just wire that amount of energy from, say, you know, Nigeria to the UK. The power loss would be egregious. So yeah, top of the AI stack, in my opinion, from a first principles perspective at least, is energy generation, storage, distribution. So it has to be distributed. So I'm a firm believer that every town should have energy generation, storage, and then you don't have to distribute it hundreds of miles across the country. So you need a fully distributed energy grid. Then you need data. So data is really that first main ingredient. It's data generation, scraping, and yeah, so that's that. Then you need data cleaning and curation, or cleaning, labeling, and curation. So it's those two. And then you need the pre-training, training, fine-tuning, evaluation and validation, and then feedback. So that's really the full stack. So if you're to look, if phase one is pure infrastructure, it's that little list there. And so so Templar's doing the training bit. IOTA's doing the pre-training. We've got Subnet 37 doing the fine-tuning. With data, we've got actually we've got two. We've got Subnet 33, so Ready AI, they're doing the data labeling, but also Score. Subnet 44 does data labeling as well, but video data labeling. And then in terms, also once you've got the models, you also need to deploy the models. So this is where, you know, Shoots comes in. Shoots 19, 56, all of these, they're the ones. Targon, can't forget Targon. They're the ones that, you know, help run a model or deploy it. And so I guess that's the hardcore stuff. But then, like any forest, you have lots of different trees, and you have other really good things like Metanova. I'm a big fan of Michaela and Metanova, although it's not really, you know, part of AI infrastructure. Metanova's, her and Pedro are doing something which you know, could do real humanity changing things. So it's again, it's worth listening to any interview that Michaela's done, because you really get a sense of what they're gunning for. So yeah, there's loads of like little different trees sprouting up, doing their own thing, but again, immense value driven, maybe not fully AI.
And within each of those sectors, how do you evaluate specific subnets? Do you look at the team first? Do you look at the total addressable market? What's your checklist? What's your criteria when evaluating a subnet?
I have a long list. Can I share my screen? Are you able to on this podcast? What I do? Okay, because
just a bit more editing work, but you know, no big deal.
Okay, I'll make it worth your while. So this is something which DSV hasn't shared before, and I'm just trying to find it on my other screen here, and because like as we're a regulated hedge fund, we have to basically document everything we do, or, you know, all of our processes and stuff like that. So what I can do is share a very basic OTC selection process, and then I can sort of run you through what I do. It's a Google Doc.
Yes.
Okay. So in a nutshell, this is what we've had to document, and I do this. I mean, I'll speed through this because I could probably talk about each one of these things, for an hour straight. But if we start at the top, so section 1, so screening phase, and I do this every 2 weeks. I literally open up every subnet other than the brand new ones. So really, the last time I did this, I opened up every subnet up to subnet 90. Because personally, I don't look at the brand new subnets because there's no liquidity there. I can't get any size in them anyway. And most of the new startup subnets, they're not going to really be ready for business for any near time. So if I zoom in a bit, maybe this will help. There we go. So identify subnets with low tau emissions relative to the price per tempo. So that example there, and what I'm trying to do here to begin with is come up with a few different lists. So if you go to the tau.app metrics tab and scroll down here, this is a really handy chart for me, especially because we can see where the protocol is applying the heaviest amount of sort of selling, if that makes sense. So so if we take this one here, subnet 64, what was this one? 51. Okay. So of all the subnets, it means that in order for Shoots to sustain its current price, it needs 7.81 taus worth of buying every 72 minutes. So the way you calculate that is, so if you want to work this out on a 24-hour basis, you go 7.8133 times that by 20, because there's 20 tempos per day. So it's 156.26 tau. So they need 156.266 tau per day's worth of buying just to maintain a flat price. So times that by the price right now, which is 397. So they need 62 grand a day's worth of buying. Times that by 30.42, which is the average month, they need $1.88 million per month of buying just to maintain a flat price. And so with this first, again, I'm going to have to speed things up because I've got a lot on this list. I look for a bunch of promising projects that have a relatively low sell side, if that makes sense. So small green bars over here. So that leaves me with a big list. I then chart all subnets and highlight those within my high expected value bands. That's a whole nother topic. I've got these bands that I look for where I try to get in on a subnet. I shortlist those that meet those. I then maintain a watch list, 2 other watch lists, low Gini coefficient subnets, and a high HHI subnet. And you can find those Gini and HHI ones again so if you go to tau.app and then you add in your columns. Have I already done it here?
Yeah, they have a lot of columns you can add.
Yeah. So I have ticked them. Oh yeah, they've moved.
Yeah, they're just all
here at the end. Yeah,
the last 2 rows.
Yeah, there we go. So you can basically filter these however you want, and then you have a little list there. So I tend to have like 3 or 4 lists just doing section 1. And then section 2, I then look at, you get more into the weeds as we go down. So I confirm gradual emissions growth over time. So for example, if I have TauSats open for this one. So if I'm looking at a particular, subnet, I don't know, let's look at one which I haven't looked at for a while, was next place, 48. Yeah, this is perma down only. But if you look at statistics, you then look at the emissions. I mean, this isn't promising, okay? You want to have a subnet emissions graph that is gradually and nicely growing. I don't want to see any spiky bullshit. So for example, I'm a big fan of Gaia. If you look at the emissions tab I know the price is going down, but look at this. Very nice growth. So this is a massive tick in my box for this particular thing. So again, big fan of Gaia. So I check the number of alpha holders again on TauSats. It's easy. You can just scroll down. You can see they've got 1195 holders there. Sorry, I won't go into each one because it will take too much time. Analyze concentration and tenure of the top holders. So you have to dig into the top holders. Are they scammy holders? Are they good holders? You can very quickly see if
analyze the behavior of the wallets.
Hell yeah. You have to, because I don't want to be jumping into a subnet where it's full of dumpy whales, if that makes, as in whales that dump regularly. So I've got to avoid those dumpy scammy wallets, and then within a wallet, you then end up opening up about 10 other wallets, because you have to go, okay, where did that money come from? Where did he send it to? And then eventually you'll realize, they then constantly selling via X. Yeah, so you end up creating a bit of a sort of a bubble chart of good and dumpy wallets. Review whale activity and dump risk. Yeah, those two are the same things. Monitor trade volume and alpha liquidity profile. So straight away I look over here and I go, 4,000 tau is going to be hard to scale in. You're going to have to scale in all day long, every day for weeks, just to get some, modicum of size into a subnet with that. Whereas if you compare that with, I don't know, like a deep pool, in fact, if you just click the subnets page and go to liquidity, and then filter that out, you'll see who has all of the deepest paddling pools. It's those. Then we go so where were we? Yep. Then I look at more of the social stuff. So I look at GitHub. Have they done anything? Sometimes I look at a GitHub and no one's done a thing for a year. I'm like, okay, this is not an active subnet here. Review the social media presence, evaluate the founder behavior. That's very important. And like if there's any toxic element within the team, it's a hard dump for me. I don't want to see any toxicity within the subnet team. If there are, I just will not. It could be a good subnet, but I just won't buy it. I have no time.
How do you evaluate that founder? How do you evaluate the team? Because I feel like that is something that is very subjective and unique to each person when they see the team.
Yeah, it's hard, especially with a lot of the teams. You can't find them. They're not even doxed. So if they're undoxed, that's a mini red flag for me. I don't like, if I'm going to be putting millions into subnets, and over time we will be putting millions into them, I don't want to be giving money to random, monkey profile pictures, if that makes sense. So I like it when the team is fully undoxed. I can see them, they've all got LinkedIn profiles. You can go into the Bittensor Discord, find their user handle, and then just search for every comment they've ever made on the on the Discord. I'm a geek. I read everything. So if they've been toxic in the past or whatever, so I just, it's a big thing, because I'm not the only person that thinks like this. Potential future investors also think like this. Not all, but some. And so I want to align my subnets, or the subnets I do go into. They've ticked all of these boxes, or in a positive way, let's say. I then deep dive into the Discord thread. How a subnet team reacts to negative criticism or constructive feedback is very, very illuminating. Because sometimes, someone will ask a genuine question and they get absolutely shat on by the team. And I'm like, whoa, okay. This is not how you handle constructive feedback. So it's very telling. Strategic readiness, validate existing roadmap, product market fit, and internal coherence. Again, I will then watch novelty search, Guru. In fact, why is this not here? Ventura Lab.
Updates to the
yeah.
to the criteria.
Sorry, Ventura podcast. Sorry, podcast. There we go. To test the narrative strength, because you can get a really deep dive into a subnet by literally watching, 4 hours worth of interviews. Then I look about, again, more social type stuff. And here's the thing: do they have a reputation to lose? I put a lot of faith in people that have a lot to lose, if that makes sense. So if someone's a very high profile, in the business world or whatever their field is, they have a high reputation, and therefore they're going to, there's a higher probability that they'll be less scammy, if that makes sense. This is a good example, actually. So I originally I'll say, and I've said this openly before. Originally, when I was like getting into Bittensor, and you're trying to figure out, who's nice, who's not, who's negative, who's not. There was a profile called Neuromancer, and I didn't like his posts. I thought he was just constantly shitting on Bittensor. He was constantly negative, blah blah blah. And I thought, I have no time for you. And then as I got to know him and I actually engaged with him and, we chat quite a lot. We have a lot of DMs and I actually got to know the person behind Neuromancer and he's Stephen. And guess what? The defining sort of shift in my view on Neuromancer was you, mate. Is that Ventura podcast with you and Stephen. And I fully understood, or I understood a lot more of where he was coming from. And he was coming from a positive space. He was coming from a constructive feedback space. He wasn't being a negative ninny, just saying shit for eyeballs and attention. He was, he likes Bittensor. He wants to see it better. And so now, whenever he says something, I listen. He's a very, very clever guy. And also within his real world life, he's a very respected person in the sports tensor community. So in the sports betting community. So in terms of reputation, he's got a lot to lose. So in terms of like scammy behavior, like for example, he's a person that I don't think will be ever scammy because he's got a huge reputation to lose it. So I've gone off on one there. Yeah. So counterparty risk, tokenomics. I then go into the incentive mechanism behind the subnet. Because that's important. Most people don't look at the incentive mechanism behind each subnet, and I think it's crucial because every IM is different with each subnet. So yeah, go into all of the tokenomics, the incentive mechanisms. Again, looking at the liquidity, can I actually get a position in there? I know a lot of people sort of criticize DSV for doing OTC deals. The average retail idiot was going, oh, why don't you just buy alpha on the market like everyone else has to? And the thing is, we do. A lot. 75% of our portfolio is regularly buying alpha on the market. Only 25% of our portfolio is done with OTC deals. But yeah, we do that. Also, we then have a look at, is this subnet, where does it fit on the whole sort of, what does it do? Is it a positive one? Is it an extractive subnet? Are there any other synergies? Do they work well with other subnets? Do they need other, there's so many different things, but to speed things up, we go through all of these different bits and bobs.
And I agree with that sentiment. Well, I probably shouldn't say I agree, but that sentiment is more from a analytical perspective. Like, it might seem like he's negative, but it's really just his critiques of what can be improved.
After I understood him more and chatted with him, he's actually a really good guy, very, very clever guy. And that
I mean, as you know, I've spoken to him, and he definitely has, I wouldn't say a stigma around him, but he may come across the wrong way to some people if they just see him on a few messages and they don't even have the full context of the messages. So it doesn't do justice to the depth of thought he puts into some things.
Yes.
No, that doc is going to be very helpful for a lot of people because not a lot of people put the amount of thought into evaluation of these subnets as you clearly do. And that's why you have a Bittensor hedge fund, right? There's a subnet cap currently in place at 128 subnets. How do you think that impacts the ecosystem? And obviously, this is something that isn't assumed to be around forever. So what do you think the impacts are of the 128 cap currently in place?
First of all, I love it. I was just a little bit annoyed, or not annoyed, a little bit saddened to not see a subnet dereg part of that as well, because like at the moment we've got a load of great subnets, but we have an absolute bucket load of shit subnets as well, and a bucket load of grifter subnets where they're just they're just sitting on emissions and not doing anything. And some of these grifter subnets, they've made $1 million+ worth of just emissions for like nothing. And so if you were to look at Bittensor as an engine, we're not firing on all of our cylinders right now. So having a subnet cap, I think, in order to consolidate energy and just to just really get as many cylinders firing as possible, I think that's a great thing. So yeah, I just wish they had a subnet dereg as well, so that any grifter or non-performant subnets could just be kicked off like it used to. Like pre-dTAO, it was great. Subnets had to do stuff for fear of getting kicked out.
And that is a wrap on part one. This podcast was cut short due to some technical issues on my end. Big thanks to Siam Kidd of DSV, Bittensor Hedge Fund, the first of its kind. He's not going anywhere. I'm not going anywhere. There will be a part two, and we'll continue the conversation. Thanks for watching, and big thanks to Siam Kidd for coming on the show. And tune in to Revenue Searches. He does those live. Kudos to him.